This program is brought to you by the Forbes-featured Freedom Hub Health Plan, the alternative to overpriced and restrictive insurance. The Freedom Hub Health Plan is exactly what you need. By Frequency Medicine Associates, supporting health professionals and laypersons with safe and effective advanced telemedicine-like technology that can scan and help rebalance the root causes of stress and illness. By the Planet Lockdown film, which can be seen on the Freedom Hub's Rumble channel along with many great speakers. And by The Pavilion, a 21st century community hub that brings together many of the disruptive innovations featured by the Freedom Hub, including direct pay healthcare, farm-to-table dining, TED-like Freedom Hub talks, and more. Visit your-mp.com/pavilion solution for details. Welcome. It is the 26th of October. Wow, Charlie, time is flying, huh? It's unbelievable. For those of you who are new to our Health, Biz, and Politics show, if you want to see any other people coming up or find where our webinars are, what's happening, please go to this website. It's your-mp.com, your marketplace for health, wealth, and freedom. And we have lots of good stuff there. And Charlie, are we going to be talking about our new program coming up yet? We're going to be monetizing or not making a subscription and changing the whole program here. Has Joe sent anything, or is that for next time?
Well, at some point, we're going to have to spill the beans
Yeah.
that, we've done this 5 years. Folks know us. We have a pretty good regular audience. We're going to make you pay some bills for us friends to ask questions live at some point, and you can either bite or leave us. You can do what a lot of folks do and just wait for the recording on YouTube or Rumble. But
Yeah,
we got to pay the bills, and we're in the commercial space, and that's what this Wednesday webinar is about. The Thursday one is for folks who want to go down rabbit holes with us on all the other issues we need to fix along with the health cartel. We've had a lot of sharing presentations. And the interesting thing about Katy, Jim, were you finished? I'll
yeah.
continue. Is that she wears a lot of hats, like a lot of us do. I'm the lobbyist for the world's oldest health freedom organization. Jim, you're the pioneer for integrated healthcare with your Pavilion project. And so many people on the show today are leaders, and that we love the fact they come back for the guests I've been able to corral for these 5 years, and I'm booked through May. But if you guys have something to say or have another leader you want to get on here, just let me know. We've had a few Trump advisors present over the years, and Katy is one of them. She was with the Trump folks, and we'll ask her about that. I don't think the Trump health group gets enough credit for what they did, given severe limits on what they could do. But I'll leave you with this one thing. Because of an acronym called ICRA, sharing agents like me are going to be rescuing bigger and bigger groups with ICRA and sharing. And, so many of our free market medical association friends think it's all about self-funding and direct contracting. ICRA and sharing is going to really add a lot of value to that, especially the list building with the HMAs for the out-of-pocket. So Trump has to get credit for the ICRA expansion. But way back, Katy was an epidemiologist, and some of our shows get banned because of where we go on that topic. We're definitely going to ask Katy about that, because we've been run through the ringer over the past 2 years because of public health experts, and I am working with a lot of frontline doctors and others trying to get a hold of Reagan's budget secretary, David Stockman. In 81, apparently, he proposed in his budget a real slashing of the public health budget. And a few of us are going to revive that effort. We're going to cause some consternation among polite people on that. But if we can get the heroic David Stockman to come back from the dead and talk about how he argued that, that's going to really get some attention. Don't want to, show all my cards to the enemies. But then again, I don't really care. And let's see, she's a Rosetta advisor, George. Klassen. She is one of you. And those of you in the weeds of healthcare commercial disruption, you know the Rosetta advisors are the smartest of us because they actually look at claims and numbers and all those math questions. And it's funny, they're trying to pull teeth with these CFOs who won't accept their solutions, which are proven. We've had a lot of shows on that topic. And finally, while she's here today, she is the lobbyist, the executive director for the Healthcare Sharing Ministries. And if you know that story, it's a law of unintended consequences conversation where, because of the expense of Obamacare and pricing mostly middle-class small businesses out of the exchange market, about 2 million people now have fled insurance for sharing. And as most of you know, that is the sponsor of our program, specifically the Forbes featured sharing program that I sell. And that's right here. John Goodman wrote about our combo sharing with health savings accounts, which we do with the workaround through what's called a MEC and a properly structured deductible. And they're to pay for deductibles, maintenance, and out-of-pocket costs. The big learn that we've added over the years is concierge shopping, because when you make a cash patient, you have to hold their hand. And with that, I'm going to turn it over to Katy, but let me show one more thing on the screen. And that's an article about accreditation. And what Katy's going to talk about, among other things, is the fact that a Democrat has a bill to regulate sharing ministries. It's not only sharing ministries now, it's medical cost sharing, because there are secular sharing companies now. But look at this highlight. So the regulator, I used to be the lobbyist for the credit unions, and we have a regulator and our own kind of government regulator. This is back in the 90s. At some point, if we take more market share, there's going to be a lot of pressure to create a regulatory body. Hopefully we can combat that with a competitive certification proposal that a lot of us are pushing in the States. But in all the articles about the regulatory effort, Katy is quoted for combating or offering as a counter a third-party accreditation program that she'll discuss. But that's just typical. Whenever you have success, the incumbents are going to use their puppet regulators to target you, because you're competing with them, which is not allowed. That's what regulations are. It's called regulatory capture. I think I've spoken enough, Katy, so I'm going to stop and let you have the floor, and then we'll go to Q&A. So thanks. Welcome.
Great. Thank you so much, Charlie. It's great to be here. I appreciate the invite. I'm going to share my screen here. Maybe. Please hold. Maybe I will not. There we go. Can everyone see that?
Yep.
Okay, great. Yep. So I am the executive director of the Alliance of Healthcare Sharing Ministries. It is true that I wear a few other hats as well, but this is one of my favorites. And I'm just going to walk through. The slides are going to mostly focus on sharing ministries. I'll breeze through them, and then we can talk about other things as much as we want. But before we can really get into sharing ministries, healthcare sharing ministries, and why they are so helpful, and why they offer such a great value prop, we have to talk about sort of your typical health insurance plan and what's going on there. So each plan is really a series of under the hood, in your Blue Cross plan or your Aetna plan, is a series of other affiliated entities and contracts between them. So you have a preferred stop loss partner, or maybe the stop loss is an in-house division of the carrier. So the carriers, they either have preferred partners that they're in secret contracts with that you don't know the terms of, or they have a different division of their same company that does this thing. So you'll have a stop loss, a reinsurance piece of your healthcare plan. They're not going to lose money on you. Don't worry. They've got stop loss. A take it or leave it network contract. Of course, take it or leave it by the docs. Like you could take it or leave it and take our crappy rates and be in our network or not. And also take it or leave it by the patients. You can pay a ton of money if you want to go out of network, or you can go in network. There's always some scam of a wellness program. These are all just scams. They're horrible. And case management programs where they promise they're gonna, track your highest cost people, and really they just leave a message on their voicemail once or twice during a cancer journey, let's say, and charge you $200-$300 for having done that. There's of course a pharmaceutical benefit manager in there that's providing the drug benefit. There's usually owned by the carrier, or the carrier owns it. The carrier either owns it or the PBM owns the carrier, which is actually more common. So, and then of course we have what we think of as a carrier, which is claims processing. We think that that's the main thing that they do. And that's why I like this chart, because it shows all the other things that they do. They do the auto adjudication, hardly any audits. You don't really have audit rights if you're an employer, certainly not if you're a patient. And then of course you have the commissioned broker, who is the sales force for the carriers, despite, marketing themselves as the buyer's agent, the employer or the patient's agent. And all of these companies, of course, they mostly, unless you're Blue Cross, sort of, although they're increasingly becoming this way, but most of these carriers, they're accountable to their shareholders on Wall Street and not really to anyone else. But all these secret contracts, they're secret. You don't get to see the terms of them. You don't get to see the sweetheart deals. You don't get to see the undisclosed conflicts of interest. All you get are the rate hikes year over year. And so, I think for our members in our healthcare sharing ministries, one of the biggest problems with health insurance is this first bullet, is that premiums are used to violate your conscience. So they're used for abortions. We have some states now where abortion is a mandated benefit in the state for all insurance plans. We have states that are mandating, sex reassignment surgeries for children, for anyone, hormone treatments for children, for anyone, to change their biological, to try to modify their, I guess, phenotypic expression of their genotype, if we can put it that way. So this is health insurance. And, you have to really face health insurance in order to see what the value prop for healthcare sharing ministries is. Whoops, I'm screwing this up. There we go. So what are healthcare sharing ministries? I think a lot of people on this call probably know, but I'll just quickly breeze through. They're communities of like-minded religious believers who come together as a community to share each other's medical expenses. Today, I'm going to be talking about healthcare sharing ministries, not just what some call medical cost sharing organizations, which are more secular organizations organized around ethical beliefs. We at the Alliance represent healthcare sharing ministries, which really are religious communities organized around religious beliefs. This distinction is important, not important to some. It is important to others. It's important to us because it offers, we engage in healthcare sharing as religious exercise. We think this is how Jesus would do healthcare, and because it's religious exercise, healthcare sharing ministries organized in this way are privileged they're entitled to religious and constitutional religious liberty protections. So that's important in a way that a secular organization would not have recourse to those constitutional protections. So that's important to us. So, like I said, that these are religious organizations. Healthcare sharing ministries do not offer insurance policies. We are not insurance companies. What our programs are not insurance. And that's extremely important. It's been recognized by 31 states that basically their state law says, if you're a healthcare sharing ministry, you're not subject to the insurance code. We like those states very, very much, and we'd like to see the rest of the 50 states adopt them as well. In the Affordable Care Act, healthcare sharing ministries were defined so that individual tax filers who were members of a healthcare sharing ministry as defined by the act were not subject to the individual mandate and its associated penalty. So that's very good, especially since that mandate still exists, even if the penalty is 0. Okay, so, just a little comparison. I take the chart that I used before, healthcare sharing ministries, we have transparent open networks or no networks at all. So the majority of healthcare sharing ministries don't have a network. And some of them rent a network, but rent just to give access to discounts off bill charges for their members. Other ministries do that discounting a different way, usually through cash self-pay. Our ministries pair very nicely with direct primary care membership, which I know this group is familiar with. They also, instead of a big, giant, disgusting Wall Street owned PBM, they offer a cash pay prescription drug discount program. So people can get the lowest prices for prescription drugs. They facilitate sharing between members rather than having medical claims come into a central clearinghouse and adjudicated and then providers paid. Our money flows between members, not into a big pool and then out the door to anyone else. That's a key differentiator from when we're trying to educate regulators that we're not insurance. We literally facilitate money transferred between members. Of course, our healthcare sharing ministries have conscience protections. They're not sharing in medical bills arising from immoral procedures or unscientific procedures. They don't require, vaccines. They're not going to raise your premiums if you don't get vaccinated, like we've seen some employer health plans do. So that's kind of nice. But conscience protections around all the other religious and moral issues like abortion and some of the sex change operations that are so prominent now. And of course, at the center, instead of Wall Street and a bunch of share owners, at the center of healthcare sharing ministry is the community of believers itself. We have prayer teams on standby. You can always call and get prayer. Lots of times members will pray for one another as well. So it's a beautiful model, we think. A little bit about us. There are 107 healthcare sharing ministries that have been recognized by the federal government. There are more healthcare sharing ministries out there, but those are the ones that have been recognized by the federal government for purposes of that ACA clause that I mentioned earlier. 9 of those are large open membership healthcare sharing ministries. The vast majority of them are tiny village programs of Mennonites or Anabaptist communities, and they're not open to the public. We share about $2 billion a year in medical expenses, our members do. And there are more than 1 million Americans that are active members of healthcare sharing ministries. Just under that are in ministries that are part of the Alliance of Healthcare Sharing Ministries. And our members are in all 50 states and across the world. This is actually a great solution for missionaries and expats who live overseas. There's no requirement that you be seeing, some American doctor or that you participate in some American network. So there is a threat landscape that I want to go through that Charlie alluded to. And usually the policy reason given for these threats is consumer protection. We have to protect consumers from these awful Christians who are going to give you some, fake insurance. So that's generally what's, being rationalized for why bills out there in the states and the feds and regulations are being offered or proposed or even passed. So, of course, there's federal legislation that has been introduced by some Democrats on the House side, and it would regulate us in a way that most religious entities are not regulated at the federal level, or any religious entities are not regulated at the federal level. So obviously we would oppose such regulation, and we would oppose that bill. And we are in conversations with the bill sponsors and hopeful that they will stand down perhaps and be reassured by some of the things I'm going to talk about later. There is executive enforcement actions that could always be taken against healthcare sharing ministries, such as some members of Congress have called upon Democrat members of Congress have called upon the FTC to regulate us. They claim that our marketing materials are fraudulent or misleading because, we're talking about people coming together and providing for healthcare, and that must be insurance. And since we're not insurance, we're big liars. Even though, there's no healthcare sharing ministry I know of, certainly not in the alliance, that's out there claiming to be insurance or trying to mislead people in any way. I think our biggest threats, honestly, right now are coming at us from the states. So typically what happens is states' insurance commissioners would like to regulate us as insurance. They need to expand their fiefdoms. But, to be fair to them, there have been some bad actors in the space, certainly not in the alliance. But there have been some bad actors. I would argue those actors are not healthcare sharing ministries. In fact, they are typically a for-profit entity, usually a for-profit brokerage firm that spins off a nonprofit front group that it calls a healthcare sharing ministry. The most notorious example of this was a brokerage firm called Aliera, which was started a few years ago by a felon after he got out of 6 years for securities fraud in federal prison. He started Aliera companies, and they spun off, he and his family spun off, allegedly, spun off what's called Trinity Health Share, and they enrolled a bunch of people, and Trinity didn't keep any of the money. Aliera got all the money, and so there wasn't any allegedly left to share medical bills. And eventually both entities were chased out of a number of states. They had misleading advertising. It was all super shady. And what the court filings that I've read show is that they did leave a number of people, members of Trinity Health Share, hanging with unpaid medical bills and unshared medical bills between the membership. So both of them declared bankruptcy in, I think, 2021. And thankfully, dozens of states had shut them down before that anyway. But they are sort of no longer stalking the earth, I guess, which is good. But that was really a huge existential threat to real healthcare sharing ministries. Our reputation in terms of, these guys were posers, and it really put us on the regulatory radar of a bunch of states and the feds. And, John Oliver did a hit segment against us. Samantha Bee did hit segments against us. There were giant New York Times articles. And we had to constantly correct the record. This isn't us. This is how we operate. That's not how they operate. But to be fair, a lot of regulators would say to me, Katy, what you say sounds great as to why, you're the good guys and they're bad guys, but how is a consumer supposed to know the difference? So I'm going to get into our answer to that question in a minute. A lot of other state attacks look like just reporting requirements or registration requirements. We have to register with the state to operate as a condition of operating, which is obviously untenable for religious organizations. Like that cannot be. So we always oppose that. But there are a few states that have managed to pass these types of regs. And others want to just issue cease and desist orders, accuse us of being unlicensed insurance, and kick us out of their states. So for the most part, this hasn't worked on most healthcare sharing ministries. There are a few who have had to pull out of states because they don't have the money to fight a big legal battle, or they made their own calculus as to it's just more effective for them to not engage in that fight. So they'll pull out of certain of these hostile states. So the states that I'm mostly talking about for all three of these bullets, Colorado just passed a pretty egregious law last legislative session. Maryland has trying to persecute all the ministries, issuing cease and desist orders. Massachusetts has a registration scheme in law and regulation. Connecticut, there have been some legislative proposals offered by the Senate chairman of the insurance committee that we are nervous about, obviously, and have tried our best to work with him, but we understand he's still interested in promoting legislation that we would have to oppose. Illinois, we were successful at working with a bill sponsor last year to have a bill withdrawn, but that was a scare. New Mexico is trying to issue cease and desist orders. But the surprise on this list is Texas, and we have really struggled. There was a very adverse piece of legislation offered by the chairman of the insurance committee on the House side in the Texas legislature that was, that it was shocking to us, and we had to invest a massive amount of resources to try to work with that bill sponsor and educate other members, about this problematic bill. It did manage to die on a technical point of order before passing the House right at the last minute in the last legislative session. But as we enter the next legislative session, we are nervous that such a bill might return. And so that's a very real possibility, even in Texas, of all places. We do think that religious liberty and consumer protection don't have to be at odds. So our approach is really here on the slide. So obviously, we think that existing state authorities all allow for unlicensed actual insurance to be shut down in a state. So if any entity out there is masquerading as a healthcare sharing ministry, but is in fact assuming risk, promising to pay, guaranteeing payments, pooling risk, and in other ways acting as insurance, by all means, fine, there's lots of state authorities to shut that kind of thing down. Again, there is good safe harbor laws in 31 states, recognizing that we're not insurance. And of course, there are state religious freedom restoration acts, as well as the federal religious freedom restoration acts, that require that if you're going to burden religious exercise, such as requiring a registration as a condition of operating in a state, if you're going to burden exercise, you have to do it only to advance a compelling state interest. Not every interest is compelling. Certainly in the bureaucratic insurance scheme, not every interest is compelling there. And you have to advance that state interest in the least restrictive means possible. So if, for instance, you want to make sure consumers are educated about what healthcare sharing ministries are, requiring a registration as a condition of operating isn't the least restrictive means. You could achieve that by, putting the websites to the healthcare sharing ministries on a commissioner's website. You could have the commissioner issue an advisory, as several of them have done, with their own opinionating on healthcare sharing ministries. You could develop your own website to educate people about healthcare sharing ministries. Or you could refer them to an accreditation entity that I'm going to talk about in a minute. We believe in transparency is the big solution. We really want prospective members and the public at large to understand what we are and what we're not, and that's critical. We believe in public reporting of our audits, our 990s. These are all nonprofit organizations, so we filed 990s with the IRS. The sharing guidelines that dictate how we share, those are public and they're on everyone's website. And to our own members, we report our administrative costs, meaning our overhead costs versus how much we spend on sharing medical bills. That's an important accountability that we offer every month. Obviously, we have to abide by C3 rules, the letter of the law and the spirit of the law. We are charities and we always act that way. And that should be expected, that we would act that way. If a consumer is wanting to know who's a good guy, these are questions they should be asking. Are they disclosing these things on their website? Are they a C3? Can I see their 990s? Are they a member of the alliance. We have a minimum set of standards to be in the alliance, but most importantly, they should be asking, are they accredited? And that's what I want to talk about here. Just this year, the accreditation model has been launched, and this is great news, honestly, because it's been a few years in the making. The Alliance helped set up the accreditation entity in that we helped to recruit some people to be on the board. The chairman of the accreditation board is former Congresswoman Diane Black. She was chairman of the House Budget Committee, a registered nurse, and a religious liberty advocate. Also Mary Mayhew, who's the Florida Hospital Association president and used to run Medicaid for the Trump administration and was running health agencies for Governor LePage in Maine and Governor DeSantis in Florida. Very eminent people. We've got the general counsel from Wycliffe Bible Translators. And so this organization is independent of the Alliance and independent of the ministries. That's what's so important. That independence is critical. And so although we helped to recruit these guys, we cut the apron strings. They're not supported by us financially or in any other way. And they have started already to accredit the big ministries in the Alliance, and any are welcome to apply for accreditation. You can see the website there and the types of things that we're having them accredit. So they're looking at financial best practices. They're looking at governance. Do you have an independent board? That was important. These are the areas that the bad actors would have violated, right? So our goal is to identify bad actors and preclude accreditation for them. So the categories are precisely the types of things that regulators and other stakeholders and the public and prospective consumers are the most interested in and most worried about. And so that's what there are 80 plus standards in the accreditation process. And each one of them speaks to some of these issues. So we really think that this private accreditation model is the right model for protecting consumers. A private accreditation can look under the hood with much greater scrutiny and robustness than a government can. I mean, governments are just sort of terrible at this. They use imprecise terms. They don't really understand us. And so they get apples to oranges comparisons. They don't quite know what to ask or how to ask it. So it's very easy to sort of, bob and weave around their requirements if you're a bad actor. So, the private organization that's a voluntary process can because it's voluntary, can require much more rigorous standards than a government ever really could. So we think this is the solution, and we're really excited that it's launched this year, and we're hoping that it will help to dial down and reassure some regulator angst. Okay, I think that's it. So I'm going to stop there, and let's just open up the dialogue.
Fantastic, Katy. That was really good. And folks in chat, you saw I invited you to click the raise hand icon under the reactions tab. You'll see it around the Zoom controls. So Jim, if you wouldn't mind helping me call on folks who have raised their hand. Let me ask a real quick question, though. I took some notes. I hope other folks took notes. On the secret contracts, that opening slide was really good because people need to see kind of healthcare from 20,000 feet, its complexity. Those secret contracts insurers sign with providers. Do you find that aggravated by this acronym called MLR, the minimum loss ratio, that a lot of Rosetta advisors have nailed as one of the bigger problems of healthcare, in that it leads to a lot of collusion with hospitals, allowing them to game billing and not be too strict on pricing? Is that a separate issue, you think, the MLR and collusion with hospitals, between hospitals and insurers, or is that kind of connected with the secret contracts?
Oh, it's 100% connected with secret contracts, and not just with hospitals. I mean, incentives matter, right? So if both parties to a contract do better financially if prices are higher, then prices are going to be higher. So that's just, most of Joe Q Public thinks that insurers are there as a downward pressure point on prices, but they don't realize that because of the medical loss ratio requirement in the ACA, that as insurers can only take that 15% profit. And so the only way to get more profit out of that 15% is to make the bigger pot bigger. So now that only applies, technically, that only applies to fully insured and small group market, so fully insured market and the individual market. But we see this, it bleeds over, of course, into the self-funded market as well. But it's not just hospitals. It's also, if you think about like Optum and United, you think about PBMs and that relationship I mentioned, how PBMs are either owned by or they own the carriers. One of the reasons why that is so lucrative for both of them is that you can just have all your profiteering on the non-carrier side. The carrier side's limited by the MLR, but if you get a bunch of profit to your larger umbrella organization, United Health Group, on the Optum side of the house, whether it's Optum RX, the PBM, or it's Optum with that's all the like provider ownership entities, then that's, you can profit all out the wazoo on that side of the house. And so the carriers can offer lower rates on the insurance plan side and shift all the profiteering to the other side. And that's all driven by the MLR.
And as a follow-up, so many are nailing this MLR as a big problem. Have you seen any effort on the Hill to examine this? I'm not sure I have. I mean, the transparency rule indirectly attacks it, right?
Yeah, I mean, sure, yes, it does. And I think that as that sort of penetrates through the market in more and more detail and becomes more and more normative for people like Chris Deacon, I see, who just joined, who are people who can really analyze that for employers. I think because right now your average employer can't make optimal use of those transparency requirements. They don't have the expertise usually. And so you really do kind of need to have an expert consultant of some sort to help you with that. But at least you can, right? You can, I mean, that investment is gold. You invest in that, consultant, because you're going to save a ton if that consultant can help you make best use of your transparency and entitled disclosures.
And George Classic can probably comment on that too, as he does a lot on the show. So you got the transparency rule, and we all know the folks discouraging bundle pricing commercially, trying to expedite that along. But any Hill activity on MLR, or is the lobbying power just so powerful that you'll never see reform of this MLR on the Hill? Or
well, I mean, I just can't see a member of Congress standing up at the podium saying, I demand that insurers be allowed to profit more. Like, even if it's good policy, it's not going to happen.
Okay, I got some follow-ups around that. We'll go, but Jim, you want to invite others with their hands up?
Yeah, before Leo's next, before he goes, I was just curious if the health ministries, if in the sharing, you offer any different therapies or something broader than traditional insurance can cover, because we know in general that they're restrictive. Actually, they're hurting a lot of patients, and people want maybe more natural follow-ups or whatever it might be after a surgery, for example. Are there any things that you guys are working towards or offering now that's a good, selling point for people?
Yeah, great question. I'm very like-minded with you, Jim. So I think that is true. There are a number of healthcare sharing ministries that do share in natural expenses arising from natural providers. Not all of them do, but some of them do. So that's something to ask. If that's important to a consumer, they should ask that of the ministry.
Right.
Quick follow-up on that, Jim. Of course, the sponsor of this show, the sharing community we partner with through our brokerage, is very open-minded on natural sharing. When you have those needs, the expensive episodes, as long as it's pre-approved, you got to get a letter from the naturopath. Here's the treatment plan. So there is some hoops. I don't know if all of them have hoops, but that has happened with overutilization, with the money doubling health matching account, they were liberal on natural healing, but they rolled it back because of overutilization. Some of those natural therapies can get really expensive going there every week. So it's going to be, I think you'll agree with this, Katy, it's going to be sort of a give and take as the integrated therapies get scale in the market.
Right.
Agreed.
Yeah, and related to that, probably, I was thinking more as a follow-up to a surgery or some hospitalization, something serious, versus using it as a maintenance. You know, I want to go get chiropractic or acupuncture for the next few weeks, which I think most of us agree, that's kind of your oil changing. That should come out of your pocket. It's not an insurance or an event that you need coverage for, right?
Well, that's shareable. That's what they're thinking about. So if you have the cancer, heart disease, bad accident with our particular partner, that's where you get the pre-approval for that acupuncture and chiropractic in recovery of the expensive episode. So that explicitly we described is what is envisioned for the natural sharing.
Lou, I think you're Leo, sorry, you're up next.
Hi, is it possible for a person to join a MedShare and deduct their medical purchases on their tax returns?
Oh, great question, Leo. Yeah, that's actually something we're working on, but yeah, your out-of-pocket spending is always tax deductible today, whether you are using it with an insurance plan or no plan or with a healthcare sharing ministry membership. So that is already deductible under Section 213D of the code after it reaches a certain percent of your income, which is hard to reach, by the way. So we don't love that provision as it stands right now. I think all spending should be tax deductible, whatever. So right now, you cannot deduct your monthly contributions to a healthcare sharing ministry, with first dollar coverage, i.e. with a health savings account. They cannot be paired with a health savings account, and you can't deduct your monthly contributions.
Thank you.
I can comment, Katy, unless you have one of those secular ones that insert a MEC, minimal essential coverage piece, which offers the minimal essential pieces to offer both compliance with the ACA and have the appropriate deductible to allow for the HSA, in which case you can get deductibility for eligible expenses out of the HSA, not the sharing part, of course.
Right. So only the MEC piece of the premium or the monthly contribution, the monthly fee is deductible under that, Charlie?
Yeah, I'm self-employed and I use it. I exercise this clause. So that's true.
Yeah, the MEC doesn't cost very much, but the bigger point I'm making is that the MEC is structured to allow you to have an HSA.
Exactly.
So the HSA is where you're going to get deductions for your eligible expenses, which do not include the sharing part, unfortunately. But I think Trump worked on that for a bit, Katy. And then
yes.
And then
we held a gun to the IRS's heads to try to make them do it. And they wouldn't do it until the very, very end. And then they did it in such a way that it was totally useless. And we at the Alliance had to oppose their reg or sort of oppose it. It was, yeah, we need legislation on that. And legislation on that is in fact in the House Republican leadership's commitment to America. It's one of the only healthcare bills that they have specified in their strategy. So we're excited and hopeful that there will be movement on that bill.
I didn't know that. I thought the controversy was the Republicans were excluding healthcare from their big ideas to get votes.
Well, bless their hearts. I think they see that tax deductibility on a huge family expense is a winner. So that is in their plan, and we're excited. It's sponsored by Senator Cruz and Congressman Chip Roy.
Excellent. Jim?
Linda, you're up.
Yes. I don't understand much about the financial issues. So I'm going to ask you a naive question. What percentage of the cost covers preventive medicine and what percentage therapeutic medicine?
Yeah, so it varies by ministry. So some ministries share in a greater percentage of preventive types of services compared to other ministries are more really like you pay most of your upfront costs and they come in for the catastrophic piece of the situation. So most of the ministries really believe in sort of the biblical model where you bear your own load. But when your load becomes a burden, then the community helps you bear your burden. So that's how they mostly function, is for catastrophic and more serious and unexpected needs.
Let me
Thank you.
jump in. Charlie, you're sharing the program you represent, I believe, has a lot of free perks that are maybe you'd call preventative in terms of telemedicine for psychological and other things. Yeah.
Yeah, but I don't want to make Katy show up in an infomercial for our sponsor. So
Some of them, so some have that, I'm sure the same thing with, you can, telemedicine these days, or at least have phone support.
Yeah, and most of the ministries do, most memberships in the ministries include access, very free or very low cost access to telemedicine.
Oh, thanks. Okay. Charles. Charles, you're up. Charles Ford. Charles.
I'm there. I'm here. I'm sorry. I was hitting the wrong button. Old man's moment. First off, I apologize for being 30 minutes late. My computer crashed. I couldn't get into the meeting. So I really wanted to hear the entire presentation because we definitely have one of the best experts in the country that we're getting to share this information with today. My couple of simple questions are, I've noticed that health sharing is the ultimate in risk pooling. But with that said, has there been any idea, thought, movement, innovation, creativity, imagination to reach out and combine the health sharing arrangements with these Christian health shares with the global medical community, i.e. using medical tourism on an international basis? And then also within the United States itself, there are providers like the Surgery Center of Oklahoma City that's cash and carry. They don't do insurance. To partner with them, reach out to them, come into some kind of an accord to where if the patient was interested in using that, they could do so. For instance, in Seoul, Korea, the best back specialist facility in the world is a place called Worriedale Clinic. They teach the American doctors how to do the latest and greatest in back surgery. There's tremendous cost savings, better quality, better outcomes, less variability, which would drive down the cost for the health share. I'm just wondering when or if any of the Christian health shares are going to involve themselves in that and look at that as a potential possibility for improvement of care and reduction of cost.
So today, any member of a healthcare sharing ministry can go to Keith Smith's facility in Oklahoma or any of the free to care surgery centers and all those independent centers. I think there's a premise under question, which is very common, that is, we're the ones contracting with doctors, and what we contract with is what's on offer. That's not how most of the ministries work, or really any of them work. Members can go anywhere for care. They go in, they walk in, they say, I'm uninsured. Most ministries say, tell the provider you're uninsured and you're self-pay. And then you upload your bill to the ministry portal after the fact. So, and then the community shares in that bill after the fact. So I think most of the ministries the members will pay the other member, not the doctor. Some of the ministries do collect the member contributions and use it to pay a doctor. But for the most part, it's going directly to members after the care. So it's reimbursing them for their self-payment. That's not, again, each ministry is a little different in how they do this. Some of them rent networks, some of them facilitate paying of doctors, but a lot of them are truly member to member. So I do want to push back also a little bit on risk pooling, right? That's actually not what we do. We constantly make this point to regulators because we really don't pool risk anywhere. We literally facilitate the transfer of members to other members. So let me give you an example. One of our ministries works this way. They're kind of the most old school version. The other ministries do something similar, but they use technology to do it. And so you are a member, you walk in, you say, I'm cash pay, give me your best discounted cash price. And you get care, you get an itemized bill afterwards, you upload it to the ministry portal. The ministry says, okay, I see that you got a $2,000 bill here. It costs about $500 a month for a family to participate in this ministry. So $500 times 4 families will pay your bill. So we're gonna tap 4 families on the shoulder, and we're gonna ask them to send their monthly payment this month, not to us, the ministry, but to you, the member. You're going to get 4 checks in the mail. You're probably going to get some nice notes and encouragements as well with those checks in the mail. And you are going to then pay that bill. Or if you've already paid the bill, you get reimbursed for having paid that bill. The ministry checks in with the member to say, did you get the 4 checks? Because if you didn't, we're going to go back and reassign someone else to you, figure out what went wrong with the ones we assigned. And so that's kind of how it works. Other ministries do this electronically. It's a little more electronic, but there's no pooling or risk pooling where the money all comes into the ministry. The ministry takes it onto their books. These ministries don't take member contributions onto their books, except 1 or 2 months a year. They take the membership fee for overhead. And that's it. Oh, and also about the global piece. Love that. So, some of the ministries our members are all over the world. So you could get care all over the world. That's fine. And if you want to go to Health City, in the Caribbean for your heart surgery, that's fine.
So it doesn't matter. It doesn't matter where that service is provided. If I do medical tourism, I get it somewhere. I can come back.
Usually, as long as the bill is in English and US dollars, that's all they need.
Yeah, they need to be able to understand the bill. Yeah.
Yeah, we've had medical tourism experts present on just this issue, and a lot of these sharing ministries are using Healthcare Blue Book or Prater or UberDoc and then Katy mentions you identify yourself as a cash patient to any provider. Well, a lot of the sharing ministries and secular companies have had to really beef up the concierge department to hold the hand of the member to help them shop for cheap drugs, tests, and specialists. So by definition, the surgery centers are getting the business mostly, or the green imaging are getting the business of sharing members. Katy, is that kind of correct? I think so. Jim, I think Lou had a question.
Yeah, his hand went down, so maybe not. Maybe it was answered.
Well, yeah, I was going to ask a question and I got a little tied up here, but so I got on that site there, Healthcare Sharing Accreditation Board. I can see a lot of value to that because it would add credence to some of the sharing. But there's only one member that's been approved by that, one organization, and it's MediShare. And will this open up to other organizations, and will open up to the secular organizations that aren't necessarily religious based?
Yes. So MediShare was the first one through the gate. The others are applying. That one is almost done through the gate. Another one, and then so literally this accreditation entity is very new, just a few months, and so they've done their first one. And so I think over the next few years, everyone will be accredited, and that will be a key differentiator for consumers. It should be.
George Klassen, are you available to unmute and have me put you on the spot to ask you a question?
Go ahead.
Or have you? All right, George, thanks for being here so much. Let's talk about sharing in small groups and big groups, and the reluctance dynamic that CFOs push back with. So many Rosetta agents like yourself are promoting sharing for smaller groups who maybe aren't ready for self-funding, or even inserting sharing, maybe with an ICRA in groups. What kind of conversations have you had with your group buyers on sharing as a possible option in conjunction with self-funding or by health?
Yeah, certainly. So the largest group I have with sharing, because they're over 50 FTEs, they're applicable large employers. So they have IRS penalties to worry about, Part A and B. Or now, when I first met them, then they were introduced to me by one of the DPC doctors I work with, and they had this problem like that many businesses have, and they're into hotels, so it's a hotel group. So their Anthem plan was extremely expensive. The best they could afford for the employees left the employees with literally $6,000 to $8,000 of financial risk, right? Which means people who earn those kind of wages don't have that money lying around. So every time they got care, these bills come in the mail. You guys all know the story, and then they have to pay them. If they can't pay them, then they send to collection, all this and all that. And then, of course, I predicted that they will get a 25% increase from at their next renewal, which came in at 24%. And of course, the brokers jumped in and said, "Don't worry about it. We will negotiate it down by 1 or 2% or whatever, blah, blah, blah," right? So instead of having their usual insurance conversation and we can save you money, you switch the conversation to, look, why are you doing all this? Your goal is to provide your employees access to healthcare without them going bankrupt in the process, right? And then we started to talk, well, what if you took on a strategy where we provide the employees with access to DPC, where they have no out-of-pockets, right? They love that. And then we said, well, what if we put health sharing in place for the employees that don't need to be on an insurance plan? And when we ran the numbers, they absolutely loved that. And we were kind of conservative on how many people would go on the ICRA route and go to the exchange and enroll in an insurance plan. But when all the dust settled, what happened was the employees that didn't have, say, serious pre-existing conditions and went to health sharing saved the company so much money that the company could pay 100% of their health sharing and the direct primary care memberships that they have. And then for the employees who did go the ICRA route and did go to the exchange and enroll into an insurance plan, their contributions were so generous that they were way better off than where they were with the Anthem plan. And the employees who kind of just picked the same kind of plan on the exchange, it basically cost them nothing out of pocket. All the people that were eligible for Medicare and chose to go to Medicare with the ICRA, the contributions were so generous, it didn't cost them anything out of pocket. They could have supplement plans, which, and then add a Part D, they still have DPC access, all of this stuff. So the long-winded point here is basically, if an employer can just stop for a second and understand the problem, there's a lot you can do about it. If they all think that health insurance is healthcare, you got to stop the bus. You got to go back and you got to say, look, do you want to give your employees good healthcare? Okay, there's a better way to do it. Let's talk about that. And then for small groups, it's really no-brainer. When they've got insurance carrier premiums, they fully insure the merge market, coming in at $600, $700, $800, $900 per person per month. I mean, come on, you have to look at something different and something better. And you just don't want to leave anybody behind. You don't want to throw anybody in the bus. You don't want collateral damage. So you got to go in there and you got to show the employer, look, we can solve this for your whole population, not just for some of them. And then you start those conversations. And just that hotel group, they did extreme due diligence. They spent weeks talking to leadership at the health sharing organization they chose. They made sure they understood exactly how everything works. And then we had 100% buy-in from leadership. They were all, okay, great, we're good. We're going to go with health sharing. One family didn't because of certain, health reasons. That was fine, but they took 100% buy-in. They all participate in DPC. If an employee or a coworker or anything comes in, there's a lot of people who could say, oh yeah, this is what we do, boom, boom, boom. These are your options. And they talk about it. It's kind of a culture shift.
Speaking of culture shifts, Katy, you can respond to George. George, thank you. That was great.
Sure.
Let's talk about the culture shift with the politicians to wrap this up, because we're about an hour in. Sharing, I always describe sharing with an analogy with banks. I used to lobby for the credit unions. Most folks are okay with a credit union for their small deposits and small loans. Less so with sharing. But it's fairly similar. Credit unions don't have shareholders. They drive profits back into member benefits. They're both like old-time mutual aid, which is how most folks protected themselves 100 years ago. How is the education process of the decision makers, the politicians, about sharing as an important part of health reform? I see it excluded still a lot when folks think about healthcare reform. They know about DPC. They've always known about health savings accounts. But what is your sense? Is health sharing, is it growing with the decision makers? Do they always include it in the conversations, or do we have a ways to go?
I think that it really depends. Certainly our kind of pro-religious liberty, conservative politicians, conservative on healthcare as well, know about healthcare sharing, and they view it as a really important alternative model that needs to be protected. I think that we always want to do a better job of getting the word out, but Democrats view us as just sort of another type of junk plan, right? It's just insurance, only cheaper and less comprehensive. And so that's, and they want to treat us the same way with the same tactics that they want to take on short-term limited duration plans, indemnity plans, association health plans that, are all sort of like boogeymen in their minds. So, I don't think the politicians are really there, but honestly, we don't need to be forefront in their minds. We need them to mostly just respect our religious liberty and let religious Americans make their own choices. We don't really need politicians to prioritize us. We just kind of need them to leave us alone. So we're not working super hard to get on everyone's radar, because we really don't want a lot of regulatory activity or legislative activity in this space, except that which would create more freedom. And sometimes if you want to do a good bill can get modified and amended. And so, it's always a risk, and there are trade-offs to sticking our head up.
Katie, how can people reach you?
One second, Jim, there's a question from Kathy. Kathy, do you want to unmute yourself and ask your question about accreditation costs? Or you can read it in chat if Kathy doesn't want to vocalize it. I mean, how much are you charging a sharing organization for accreditation? Not you, but the accreditation organization.
Yeah, the accreditation entity. It varies by organization size. So the fee schedule, I don't remember it exactly, but it's a 5-digit fee for larger organizations.
Yeah, these are giant organizations nationwide, and there's so Jim was inviting you. Wants you to close, and what's your takeaway for this event, and how folks can reach you?
Yeah, so you can reach me at Katy, Katy, at ahcsm.org. So that's Alliance of Healthcare Sharing Ministries.org, ahcsm.org.
And a takeaway, a thought for us to leave with?
Yeah, freedom is good. Freedom usually works.
We'll work with that. We've been blessed, Katy, to have you with us. You wear a lot of hats, which a lot of folks do, because there are so many angles to give patients and Americans something better than what the cartel is offering. So thanks for being with us.